Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Johan Dernmar, Head of Investor Relations at Diös Fastigheter, and Tobias Lindbergh, Head of Sustainable Finance at Handelsbanken Debt Capital Markets. It's great to have you both with us. Welcome to Trade Talks. And Johan, I'd like to start with you. Tell us more about Diös and your business.
Thank you, Jill. To start off, Diös is a real estate company based in the northern part of Sweden. We have a property value of approximately $2.8 billion. Our main focus is within offices, but we own all types of properties and premises. Our strategy is within urban development, and we are active in both property management, renovation, and also new builds. Our focus is in the city center of our 10 cities. Northern Sweden today has a great access to clean energy, and it's because of that we see the northern part of Sweden as the epicenter of the green industrial revolution going on. The coming 10 years, over $100 billion will be invested into this transition within the industrial manufacturing business.
Why did you choose to issue a bond under the proposed EU green bond standard already now?
We were in a position to update our green financing framework. We saw an opportunity here to be proactive in an area with a lot of regulation coming our way the coming years. We also see increased interest from important stakeholders such as bond investors and equity investors putting questions to us around this. And we saw a possibility to take a position to increase the interest around the company also. And actually, we knew this work needed to be done at some time, and why not now? And we also had some assets we saw that were complying with the new regulation as the taxonomy put out.
And Johan, what benefits do you see from this process?
Being in the front seat of this area, of this complex area, we have learned a lot. To be able to adjust the decision making within the business with the upcoming regulation is a great benefit for us. And we have prepared the organization for the upcoming regulation and reporting requirements as well. We also saw benefit from reducing the risk of greenwashing that could occur in the market today. And just to notice, we also go further than the taxonomy requirements by putting in environmentally certification as a requirement in our framework, just because we know that our tenants will demand this for the future.
And Tobias, let's bring you into the conversation. What is special about the Diös recent green bond?
Well, it's the first that we know of to align to the proposed European green bond standard. So I'd say that makes it pretty special. This is exciting because the markets are undergoing a major shift, transitioning from voluntary principles and mechanisms to regulatory defined practices and requirements. And I think once this regulation comes into effect, I'd really expect to see a rapid, wider shift into European green bond-based structures.
Tobias, can you tell us more about the regulatory background and progression of this market?
Sure, I'm happy to. It's been a long wait. So the European Commission, they launched the work with the Sustainable Finance Action Plan back in 2016, or the preambles of the action plan. And a cornerstone of the work carried out in Brussels has been to ensure a capital aggregation mechanism towards activities that are compliant with the Paris Agreement and the climate target of the European Union. And the EU Green Bond Standard is an important part of the capital aggregation mechanism, allowing issuers of European green bonds to direct financing towards such activities that are assessed as green and sustainable according to the EU taxonomy. Now, of course, there is tremendous amount of detail in all of this, but hopefully this is a fair high-level summary.
And finally, how did you enable this new framework and transaction?
Of course. So I think the role of markets have always been to innovate and to solve problems. And in this case, we have a voluntary regulation that hasn't been adopted yet. And therefore, it's not technically possible to issue full European green bonds, so to speak. But we've been able to adjust the structure and terms to allow for a future accreditation as a European green bond, including also the opportunity to retroactively adjust the terms of bonds that have already been issued. And I think that this is the main innovation here, to basically create a structure whereby it's possible in the future to accredit them as full European green bonds once the regulation has come into effect.
And Johan, how do you think the market for European green bonds will develop? And Tobias, I'll ask you to follow up on Johan's answer.
Of course, looking when we started our ongoing project, we didn't know about the taxonomy and the details in it. And now we can adopt our decision making for the new regulation. So the amount of assets that will be into play to be financed through these green bonds and green financing will of course increase when we know more about the regulation. So looking forward, we have the regulation coming into force 2023. So by then I would expect the market to grow rapidly from there and further.
Well, from my perspective, it's a huge regulatory shift within the European Union that's underway right now. I think as the proposed legislation comes online within the next 18 months, we'll see a gradual transition to European green bond-based structures. And I think in particular, once taxonomy disclosures kicks in for the financial year 2022 reporting season, then I think we'll see the European green bond market really taking off.
And finally, Johan, what were the key differences compared to previous green bonds you have worked on?
I would say the regulatory framework and the regulation is the main difference. A lot of things are being put in place. A lot of things has been cleared. Something that we could relate on when we put up the requirements in the financing framework, and also for us to be able to issue green bonds in the future, European green bonds in the future, is a label that I think more investors could relate on and make the market more attractive and more homogeneous than it is right now. And
Tobias, any last words on the key differences that you've seen?
Well, there's a lot of subtle changes throughout the offering as such. Of course, this being a regulation means that a lot of the items that we used to see in green bond frameworks are now automatically included, so to speak, because they're defined through regulatory means. And this means that the offering document as such has definitely changed. We're transitioning from something called a framework to a fact sheet, which is a much shorter and concise document compared to what we used to have. But in terms of what investors are being offered, I guess the main change is what Johan has alluded to. It's the connection to other regulations, specifically the taxonomy, which will define what is a green and sustainable activity within the European Union going forward. And that includes a lot of things. I think in particular, issuers will probably have to put in quite a bit of work with the climate resilience analysis. That's what we're hearing from clients. It does take quite a bit of time, and often you would be reliant on external parties to assist you with that analysis, activity by activity.
All right, Tobias, Johan, thanks so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.